Hello, I'm Luke from Brownlow Utilities and welcome to this week's Energy Market Snapshot. So in line with the precedents set over the last couple of weeks, last couple of months even, we're going to see yet more geopolitical uncertainty going into this week and no doubt into next. Big part of this continues to be in and around the Strait of Hormuz and the fact that there has been no negotiated long-standing peace between Iran and America and Israel. We have thankfully reached a position now where after trading strikes over the weekend and early on Monday morning, Israel and Iran have now returned to a ceasefire kind of basis and they have stopped trading missiles for the time being. However, there are continued concerns between Israel and Lebanon as well. Israel still bombing Lebanon and Iran demanding that they stop doing so. A big part as well behind this volatility is that much of the US involvement now, the diplomacy of their involvements and their attempts to try and alleviate this situation seems to be being conducted through Truth Social rather than through typical diplomatic means. And that has created a really volatile environment for trading both gas and electricity and indeed a wide array of commodities and no doubt other indices. So what we're hoping for is a peace, but you know we're nearly 100 days into this conflict now, so we're a bit reticent really to say that this is going to be forthcoming anytime soon. We'll be hoping that that'll be coming, and you'll see if that does occur, quite a quick drop in the short-term market. However, there's no signs of that being achievable just yet. On a more boring basis, if I go back to the proper energy fundamentals, you've still got very low levels of gas storage in Europe. And the reasons for that are twofold. One, this situation with the Strait of Hormuz that I mentioned is actually, obviously, impinging LNG deliveries globally and having a big impact on the global supply of gas. But furthermore, it's actually more price related, I would suggest, in that the summer price now for gas is somewhere in the 120p a therm kind of region. That is for the balance of this summer, so June, July, August, September. And the price for winter 26 is more or less the same. It's a little bit higher, so maybe 124, 125p a therm at the time of reporting. So really there's no propensity to be buying this gas at summer prices when they're very, very similar to winter prices. And that means that not a lot of gas is being bought for storage usage. It's being bought for immediate usage. So I would suggest that really we're not going to see a big surge in European stocks between now and winter. And that's clearly not a good thing for stability markets, but it's not necessarily a bad thing if it means that we're not buying the price at an elevated level. The further into the future you go, you do start to see the return of typical summer-winter spreads, but it's not present at the moment for the current summer and the subsequent winter, and indeed the next summer and the next winter. It's further along the curve where you start to see normality resume. On top of that, a nice little bit of good news, I suppose, is that the demand side picture is fairly comfortable for the time being. So we've come off the back of a heat wave in both the UK and Europe, and that's really helped to drop heating demand quite substantially, quite sharply in both either sides of the channel. And on top of that, you are starting to see, plenty of solar generation as well, which has alleviated some of the gas demand that would otherwise be used for burning gas to be used as electricity. So that has been good news in the short term. And the other bit of news that is sort of one of the few kind of benefits of global warming, if you like, is that we are looking at a very warm El Nino winter, which means that you're going to have very low heating demand, or comparably low heating demand to previous colder winters. So we've got a very warm winter coming, and it's expected that it's going to be far and above previous records, going back to the 1950s, I believe. So I would expect really that we're going to have relatively low demand, and that alleviates some of the risk that we're seeing on the European gas storage curve. It does nonetheless, however, vindicate the kind of science behind global warming and the no doubt continued impact that it's going to have on the planet. So thanks very much for joining us. Hope you enjoyed it. If you do want to continue to watch any of these or subscribe to watch any of these market snapshots in the future, please subscribe to our LinkedIn and YouTube channels, and you can follow them on there. But if you do want to find out more about our services, how we operate as a company, or want to speak to one of our experts in the field, please go to www.brownlowutilities.co.uk, drop us an email or give us a call, and we'll put you in touch with the right person. Thanks again for joining us.